I'm Alex Gurevich, and this is Real Visionaries. HonTe, this is a Japanese strategic term from the game Go. And what it means is true move, which is, which in other words, it's a move which is not flash and not something that leads to rapid victory, but something which is most correct move, which gives the best results in the long run. And this is what I'm focusing on, long horizon investments, trades that have very high probability working over the long period of time, and not being too caught up on short-term noise and volatility, and uh, making an objective, not performance in a given month and a year, but an objective is to do well over a long period of time. I was born in St. Petersburg, Russia, and I grew up there, left in the middle of college. All really from very early age, I was geared to be a mathematician. Since I was 4 years old, I was saying who I want to be. The answer was always, I'll be a mathematician. That was kind of obvious. That's what I wanted to be all my life. And I did end up getting a PhD in mathematics already in America. But there was another side to my passion for analysis. And I always had a passion for strategy. It started with me like playing chess and other strategy games. Of course, like it's such a cliche. I'm Russian. I played chess when I was young, but I played numerous other games, even more seriously than chess later in my life, including the game Go, which is hence the origin of this company name. Played poker, I played bridge, I played a whole bunch of strategic resource management games, but also I did a lot of academic competitions when I was young. So for me, like competing and strategizing was a natural way of thinking about things. I have always delineated the difference between strategic and analytic thinking. Analytic thinking, whether it's an economist or a mathematician thinking about thinking, they're trying to come up with a solution, trying to come up with an answer. While strategy is not an answer, it's a system of responses. So strategy is what you need when you don't actually know what's going to happen in the market. You might not even have an opinion on what's going to happen to the market. You just develop an idea how you're going to build a portfolio in such a way that it has good results and how you're going to respond to various market moves, which may or may not happen in the future. So that is a very different way of thinking. And I feel that there are not many people, it might be arrogant of me to say, but there is not many people who are good at both analysis and strategy. And that was my always advantage, that I had those two passions well interwoven. So going into financial markets was very natural for me. I remember in the 80s when I was a teenager, I saw the movie Wall Street. They showed it actually in Russia, the movie Wall Street, and I was so obsessed with it. There is a paradox of that movie that it was meant as a cautionary tale, but instead, of course, it was a huge inspiration for a whole generation of traders, because they made it like they focused on the side of the game which was cheating, but they really also introduced it to the actual game of it. And you realize that you can win this game without cheating. And why would you want to cheat? Because if you want to prove that you're the best player, why would you want to completely devalue your own success by cheating? When I went to Wall Street, I was not interested in doing research. I didn't want to be a quant, what they say, with the term quant. I had zero interest in that. And every juncture when an idea of me doing something like this was raised, I absolutely refused. I wanted to trade. The decision was not easy to go onto Wall Street at the moment when I graduated, when I got my degree, because I had a lot of really good academic offers. And at that point, I kind of was on the juncture, like whether I want to go on with careers, become a math professor, or whether I'm going to fulfill my other passion. And I think what decided me that I felt I already found the measure of my success in mathematics. I found how I knew how I rank, how good I am, roughly what I can accomplish in my lifetime, but I will still get to test myself against the markets. There are two separate motivations for writing any book in some sense. One of them is the content of a book, and another the actual process and the idea of writing something down. When I was a teenager, I started to be really interested in fantasy and science fiction, and I read everything I could lay my hands on when I was young. Growing up in Russia, whatever was translated, eventually I started to be able to read in English as well. But because there was not so much available, of course, me and my friends had to make up our own stories. So, of course, I made insane amount of various science fiction and fantasy plots even while I was in high school. Most of them were in my head because I actually always hated the process of writing. I started to think like, okay, well, I have all those ideas. I need to get them down on the page somehow. And I was really bottlenecked around that. But first I had to dictate my writing to write anything. Then I had to basically learn to write, which is a skill. It's a craft. I took some classes. I got a writing coach. The origin of my strategic approach is probably goes back to 2002 when it was more or less formulated. But if you could go even back earlier, I started Wall Street in '97. But my strategic approach, while it was pretty clear to me, was still somewhat intuitive in my head. It was not very well articulated. I articulated some things, but not articulate them comprehensively. I did some presentations internally in JP Morgan with ideas like risk parity and other ideas relevant to my strategic approach. But it was still a little bit like an intuitive ideas in a young person's head. And then as years passed, I came to the point that I realized that I can articulate my principles much more clearly. The seeding conversation maybe for my first book was a conversation that happened back at JP Morgan when one of my coworkers said, say if you do 100 trades in a year, look at all those trades. What if we did just 5 of those best trades and dropped the other 95? How well it would have performed. And then I had this idea, can we ex ante decide what are the good trades? And I articulated in my first book, which is called The Next Perfect Trade, with a subtitle, A Magic Sort of Necessity. I formulated this series of strategic principles. So just qualitative in this book. They became much more quantitative in the more recent years. But how do I select what is a superior trades? How do I abstract away from speculative arguments and opinions and can formulate objective criteria which make trades more likely to make money than lose money? And that became the core of my strategic system, building a balanced portfolio of superior trades, each of which has positive expectation, but they cover different economic outcomes. And that is the essence of my book. I spent a lot of my first book talking about bond, specifically being long US Treasury bonds. It's one of the greatest trades ever over the last 40 years. I called it the one trade. I had a poem about the bond trade, which is a Tolkien-inspired poem. I did a lot of things like this. Of course, my first book, because of my passion for fantasy, had to have a sword on its cover. So because the subtitle was A Magic Sword of Necessity. And I always felt that, well, I'll probably write a sequel at some point. And the sequel would be called The Next Perfect Portfolio, A Magic Shield of Sufficiency. Because for a mathematician, the word necessity and sufficiency are complementary words. I don't think many people, like lay people, think about those terms, but sufficiency is the opposite of necessity in mathematical logic. So, however, COVID pandemic came, and I realized that there is a whole different way to think about things. And then it was March 2020 happened, and every day felt as long as a month. And I realized that there is just so much material in just what happened in that one specific month. And I have a lot of records to capture it. And what I could do, I could take the lessons and the ideas from my first book and see how they apply in a crisis environment. There are several things I wanted to accomplish with the Trades of March. People were actually asking me, is it a history book or is it a strategic guide? It's a little bit of both. It is a book about the history of the pandemic, but it is also a guide to how navigate a crisis. But I also wanted to tell a faithful personal story of how a money manager fares during a crisis, not just in terms of portfolio P&L, but also the psychological journey. What stresses you go through? How does it interact with your personal life? And in that way, I think it could appeal to broad audience because whatever profession you're in, you might deal with crisis in your professional life, and that does not stop your personal life. And COVID was just such an interesting juncture that everybody was affected on a personal level. I was interested, how can you present it as the most faithful way? How can I let readers to be a fly on the wall when the amazing events actually happen? and give reader a chance to interpret things on their own. And what I realize is that is what is unique nowadays that probably people didn't have before, and especially with remote work, we have a complete transcripts of our trading chatter. And the trading chatter is very revealing because people say things like, "Oh crap, what's going on? Unbelievable! I've never seen anything like this." Or like, "What do you mean such and such are giving us no offer? You mean a bad offer? No, no offer. They're not willing to make us a market." Well, how can a bank not be willing to make us a market? Things like this. It's like, we're low on cash. What do you mean we're low on cash? We're making money. Why? How can we be low on cash? Well, there are margin calls everywhere going around. So things like that, like the reality of experience. And I feel that without that really exact and faithful experience, aspiring traders would never know what it is really like in the trenches when the war is on, when the battle is on. I really honestly think that there was no other exposition as faithful that could tell aspiring traders what it is really like to sit in the cockpit as a financial manager. The caveat, of course, that I do one particular kind of strategy, it's one particular kind of fund, and other people may act very differently. Maybe they curse more, maybe they work more individually, or maybe vice versa, work as a team. There, like for example, in my book, you could see a lot of me working with my team and how we interact. Maybe other people don't interact the same way. Yet, at least it's one account, at least it's one faithful look in the situation room. And I wrote enough of my own commentary and text to explain things and make things accessible and to uh, rationalize my thinking and derive strategic lessons. Yet there is still enough in there to have that situation room feel in that book. The subtitle to my book, to my second book, is A Shield Against Uncertainty. And of course, if I had a sword in my first book, there has to be a shield. Even though I changed a little bit the title from my original plan, instead of calling it a magic shield of sufficiency, I ended up calling it A Shield Against Uncertainty. But that particular subtitle and that particular idea can be of interest to broader audience, to people who not just do finance, because people face uncertainty in their life. And I think COVID pandemic taught us more than anything, even personal life, like all along, nobody knew like how bad it's gonna be, when what's gonna be open, when it's gonna be shut, am I gonna get it, how sick I'm gonna be. And then it spills into your professional life decisions. Whether you are managing a hedge fund or a liquor store, you have to make those decisions. And what I try to focus in this book to explaining that you can operate in the environment of complete uncertainty, and you can abstract out of things which are uncertain and think and really focus on what it is that we do know and make calculated risks based on that. In my book, I focused on the fact that we knew two things throughout pandemic, really. One way or another, pandemic will be resolved. And we probably emerged on the other side of it with reality which is possibly somewhat altered, but some kind of new normal. And the other thing that I knew that central banks and governments will provide as much liquidity as needed until there will be too much liquidity. They'll keep providing money till there will be more than enough money for everyone. Those were the certainties. What was not certain is how bad it's going to be, how long it'll take for the money to be provided. And then with all those uncertainties, I talked about how I could formulate my strategy to navigate it. I discussed this, I made a comparison in the book talking about like black hole and white hole, how the market was just totally ruptured by the black hole and everything was distorted, all the timelines, all the market actions, all the products were trading in disjoint fashion. But on the other side of this black hole, once you fall into it, you cannot come back out of black hole. Black hole singularity is your only future. Once you're falling into the black hole, you cannot turn around, not because singularity is ahead of you, but because it's in your future. It's really hard to understand this logic, but what happens is that going to the black hole is the only future you can have because the time flows there, not just space. But then you come on the other side so that kind of COVID singularity, the rupturing of market was almost unavoidable. But then on the other side is the Fed was adding money as the government was stimulating. There is a white hole, an explosion of wealth on the other side. once you pass through a new universe. And it could happen even in people's personal life. I mean, I'm not going to be doing personal life therapy here on this venue, but I think people who face personal crisis and get to the point of no return can see at some point, well, there is actually a white hole, an explosion of success or positive energy on the other side. So what we thought here with this Real Visionary series, that we might do a complement to the book and expand it a little bit by bringing a few more perspectives. They have a story to tell of how the crisis challenged their framework, how they've navigated it, and what went wrong, what went right, what were the hits, what were the misses. For example, at the end of my book, one of the last chapters is called Hits and Misses, where I kind of do a recap what mistakes I made and what we did really right. And I wanted to hear other people do this recap. Is their ratio of hit and misses? What was their batting average in March 2020? And honestly, starting this interview, even though those are people I know well, I did not start it with knowing exactly what they did during that year. I don't know exactly what they made or lost that year, so I had to. I had some ideas, but in many ways I had to start from scratch and ask, like, hey, where were you going into this? What was your feeling before that the crisis started? But I mean, what was your zeitgeist end of 2019? What was your moment of like, oh, wow, this pandemic is serious. What did you do about it? And how did you come out of it? So that was a structure. I interviewed Brent Johnson, who is a long-term friend of mine, and we often talk about macro markets. He probably doesn't need introduction to Real Vision viewers because he shows up a lot and he's very articulate and entertaining. And he's the author of well-known milkshake theory, about milkshake dollar theory, which I really wanted to discuss with him because there was a lot of swings and interesting situations with the dollar and liquidity happening, and we will not always had the same views over years. And more recently, he was more right than me.
When I look at the last 25 years, whenever there's been a crisis, the dollar has gone up. Now, that's not a guarantee that the next time there's a crisis, the dollar will go up, but it's a good indicator. And based on my understanding of the monetary system, it's very hard to have a crisis, a global crisis, without the dollar going up.
And also because his framework is very different, because of his partial focus of wealth management. It's a very different framework what he starts from a macro fund like me. So it's interesting to see, okay, how does he deal with this? Then I talked to Mike Green, who also needs absolutely no introduction to Real Vision viewers. Again, needless to say, he has a very broad and very precise philosophical frameworks, and he's real erudite. He studies everything, he knows everything, he really formulates his ideas in a very thoughtful and articulate manner, but also he was working a lot within quantitative framework. And how do you deal with managing a quantitative framework?
Calibration of an algorithmic strategy is always very difficult when you face unprecedented events, right? And so rules that you might have in place that, here's how far I let something run, or how far in the money, or what type of moneyness strike that I use in terms of either a call option or a put option, those become challenged in that type of environment, right? And so I would just say that the general difficulty of using a algorithmic versus a discretionary strategy is one that I found frustrating in that environment.
It is interesting that his first reaction to my book, he was one of the early readers, and his first reaction was, this book gives me a PTSD again from the time of March 2020. And I was like, yes, I accomplished my goal. So I think it really resonated with him, and I was interested in see how what he thought were big successes and failures during that time. And I was interested in how he formulates his framework going forward. Talk back in those like white hole discussion, how he formulates his framework going forward, what came out of pandemic from his perspective. And I interviewed also the person I know for many years, who is very well known in financial world. I think he's new to Real Vision, Jim Leitner. He has been one of the people featured in the book Inside the House of Money. So he's a very well-known and experienced macro trader. Interestingly, some of his background is also from Bankers Trust as mine, but I think he was there before me. He has a very interesting long-term and a very distinct long-term framework. He and I had a lot of conversations about using options on trading, and I was looking forward to talk to him about that and talk about how to use or not use options to navigate this environment.
Digital options are the ones that pay out if your underlying is above or below a certain price that you have set. And it pays out a certain amount of par, 100, and you pay for that some percentage, and therefore that's the probability that the market assigns to that event happening.
And he also formulated a lot of, both before and after pandemic, he formulated a lot of views about sectors of financial markets and how they will perform, and the kind of his idea about economy of bits versus economy of things, which turned out to be prescient and very on point. And I was really, with him, I was really looking forward to discussing what he saw coming out of pandemic, not just how he navigated through it.